assumed to be 15% of total. I'm going to go ahead and create this rule. You see all of those numbers change, as well as my gross profit respun for the quick metrics bar. You can see this graph here is indicating what's happening in this account. You can see the solid line are these actuals, and then you jump into this forecast and where I've started this rule. And so it looks like I may have assumed incorrectly. There's like quite a bit of a decrease here between that 74 and that 72. Maybe materials is actually 30% of revenue, and I have this assumption incorrect. But this graph allows you to have a visualization of what's happening in the account. I did mention you are able to use drivers in a formula or driver rule. I do want to quickly show you that, or at least an example of that. So again, you have this drivers grid, and you can add drivers to this grid and enter in those numbers here. Here I have entered the expected hot coffee purchases and iced coffee purchases for the upcoming months. And then in my profit and loss for my revenue, I believe for my sales revenue, yes, I have this formula, which I will show you really quickly. I have hot coffee purchases times 7.5. So assuming that hot coffee costs $7.50, and I'm adding the iced coffee purchases times 8, assuming iced coffee costs $8. And so I'm using those drivers in this rule for this account to calculate sales. And that's how you would do that. Okay. Gone through value rules. And again, I do want to emphasize not every account does need to have its own specific rule. There are times when you can simply choose the same rule for all of the cost of sales accounts, apply the same rule for all of the employee expenses maybe, or apply the same rule for all of the rent and utilities or for all of the sales accounts. You can add a value rule on the classification level, the heading level, or the account level. So you can get as custom, or you can paint with a wide brush if you want to and prefer. You will also want to indicate how you are receiving revenue or paying certain expenses with timing rules in your forecast. So if you're receiving some revenue in advance, or if you're receiving some revenue on credit, it's going into accounts receivable, then you can choose the appropriate timing rule at the account, heading, or classification level again. To change a timing rule, and so let's go ahead and do this on our sales account. I'm going to go ahead and click that account. And again, you can see all these value rules. You can see if I have several timing rules on this account, you could scroll through those as well. You may have more than one timing rule on an account because perhaps you're using a certain collection method, but you're expecting to change your revenue collection method in January of 2021. And so you apply a different timing rule forward. Let's go ahead and model that out. So I'm going to go ahead and go into the baseline of its account. So up until January, it looks like we are collecting 10% of revenue in the month prior to the current month, 70% in the same month, and then 20% in the month after. But perhaps I'm expecting this to change because we're changing our collection methods. So I'm going to go ahead and add a new profile to this account. You can see I have this monthly option that we just saw, and I can add prior months to that option. I also have a quarterly option. So if I'm expecting to receive this revenue a month prior to the quarter, or a month after, or at a certain month within the quarter, this again also will work for expenses. So if I pay an expense at a month prior to the quarter, or maybe a month after, I can model that with a timing rule. And then of course you have annual timing rules as well. Let's go ahead and go back to the monthly. And let's say that my payment spread is switching. I'm not going to be having that same one. Instead, it's going to be 80% in the same month, and then 20% in the remaining month. Again, I can add an assumptions note and include this in a report if I want to. Let's go ahead and create that profile. Okay. And if I click this 3-dot option again, I can see the preview of my cash timing impact. So let's see. So this shows us, again, we're receiving 80% of revenue in the same month and then 20% revenue in the next month. This shows us how much is going into cash right away and how much is going to accounts receivable, and then how much is coming out of accounts receivable and going into cash within the next month. So you can see a preview of that account if you want to. Another way to audit an account and check and make sure that you know exactly what's going on in the forecast is if you go to your balance sheet. And here you can click on an account. You can go to the baseline. I will explain what the baseline means in a few moments. And you can see this magnifying glass icon that allows you to view detail. If I click on that, I have my opening balance. I have all of these changes that are happening. I'm paying expenses. The money is coming in at the top. And then I have a few journals that are happening. It looks like I have some tax as well as some accounts payable, accounts receivable. And then I have my closing balance down at the bottom. So I can audit what is going on in this account in the forecast. Okay. And again, you do have that lovely visual graph here. Now, before we move on, I just want to make sure I've mentioned everything. Oh, yes. So as I mentioned when talking about the onboarding options, you can change the options you choose during onboarding. You can do that by simply setting a different value rule at the account level, or you can go to your forecast settings. When you enter your forecast settings, you can completely reset your baseline back to the default rules if you want to. If you've done a lot in your forecast and you've realized that you've maybe gone far, taking things too far, and you just want to go back to the default rules you originally chose during onboarding, you have that option here. You also have the option to change your default accounts that you set during onboarding, as well as you can change your tax settings here. And when you reset your baseline, you have the option to change the default rules that you chose as well. Okay. I also realized really quickly, I forgot to show you the visual aspect of the quick metrics bar. You can see these little charts, they're very, very small. That's not very useful, but if you click on them, you can change it to the actual visual version. And that way you can see maybe how far off your threshold you are, as well as what's going on in terms of trends. Okay. So now I'm going to move on to micro forecasts. Once you're satisfied with your main forecast setup, you can start planning for certain business events, or you can have discussions with your client around certain business events and maybe what they might want to do within the next year or the next quarter, or even within the next month. In Fathom, we have micro forecasts to model this. So you see this microscope icon, microscope, micro forecast. So that's how you access that. When you click on it, you can see the list of micro forecasts. I've already made quite a few. This is your micro forecast manager is what we call this little menu. And I have the option to create a micro forecast at the bottom as well. So you can see that I am modeling hiring certain people, maybe buying certain equipment, a marketing campaign, as well as a project, maybe a partnership that I'm working on. If I click the Create Micro Forecast button, I'm going to go ahead and model hiring a sales associate here. I have these sales reps, but a sales associate is completely different. I'm not sure how, but they are. And let's go ahead and create this micro forecast. So as you can see, I can simply start adding accounts to this micro forecast if I want to start from scratch, or I have these micro forecast wizard options. And these will have Fathom prompt you with questions, and then Fathom will take your responses and generate a micro forecast based on your responses. So I'm hiring an employee, and these are the types of questions it'll ask me about this. Are they permanent or are they contract? Let's say that they're permanent. Their annual salary is maybe $70,000. And then wage will be coming out of our salaries and wages account. Clicking next. Okay, so the micro forecast wizard is letting me know that I have certain taxes that I've set up in my tax settings. I have a Medicare tax that will come into play here, as well as a payroll tax, which makes sense because I'm hiring an employee. And it's telling me that these will come into play because they are impacting my salaries and wages account specifically. That's the account I chose to pay the wage for this employee. So I'm going to go ahead and add that micro forecast, and it has generated the micro forecast for me. You will notice this is very similar to the main forecasting grid. There are not any actuals to scroll back on, and that's because this is a new event. So it hasn't happened in the past, or no actuals to base it off of. But you do have your profit and loss, or your incomings, your revenue accounts, as well as your outgoings, your expense accounts. And then you have your balance sheet. So your assets, liabilities, and equity accounts. And so micro forecast is a contained set of P&L and balance sheet movements, all associated around this one event, the hiring of this sales associate. So it's showing me that I'm paying their wage going forward. My income tax is going down because I'm paying their wage. So my expenses have gone up. My income has not increased. My income tax expense has gone down. I am paying a payroll tax, and then their wages, of course, coming out of cash on hand. But this is a sales associate, so I am expecting them to actually bring in some revenue. If I want to add an account to my micro forecast, I can click this button right here, and then I can add my sales account. If I maybe don't have an account yet in my chart of accounts that I want to use, I can say doesn't exist. I always just type exist. Account doesn't exist yet. And I can type in the name of the account that it's going to be and create a future account. Well, let's go ahead and add this sales account. I'm going to add that. Okay. 0 incoming, and that's because I have not yet added a value rule to this account. So this is a sales associate. I'm expecting to train them, of course. They'll probably be training for the first 2 months. And then maybe I'm expecting them to bring in some revenue after that. So starting the 3rd month, I'm going to go ahead and create a value rule. And in this case, I think I'm going to use the constant and growing. And that's because maybe I expect them to start bringing in $3,000 a month, but I also expect them to increase that $3,000 by 5% each month. I'm going to go ahead and create this rule. Okay. And as you can see, that has really impacted my numbers here. My income tax is not going down as much as it used to be because I am bringing in some revenue from this employee now, and it will continue to pretty soon. Yep, I'm starting to pay income tax now because I'm bringing in more revenue. This employee is bringing in more revenue than it is costing me to have them. So that's good. And that is how I'm modeling this employee, or the hiring of this employee. It's just this contained set of P&L and balance sheet movements that we call a micro forecast. And this will be added to my main forecast. So right now I have them starting in July 2020. You can see that right here. But if I go back to my main forecast and I go to sales revenue and click on sales, you can see this icon. I have 5 micro forecasts contributing to this account. So if I click on that account, you can see all of the micro forecasts that are adding to this account. And if I scroll, I can see exactly what's happening, exactly what they're contributing to this account. And again, I mentioned that I would explain this baseline right here. The baseline is what's happening in the account without any micro forecasts. So you have your baseline value rule, and then you have the micro forecasts added on top of it, or your events that are happening on top of your baseline forecast. Okay. Now, you have this hiring of this employee, but things change. A pandemic may happen, or something else could happen in the world, or maybe you just want to take a different route with your business. And so you want to maybe hire that employee at a later date, or you want to have different events happen or different business decisions happen instead. You can do all of that on your business roadmap. So this map icon. And when I click on the roadmap, you can see my micro forecasts that I have active right now. I can see any inactive micro forecasts. So if I maybe actually do want to purchase this coffee roaster, I can add that micro forecast back in. And it will appear on my main forecasting grid again. But I talked about maybe hiring the sales associate later. Maybe I don't want to hire them in July. I actually want to hire them in November. I can grab this micro forecast bar that is representing the sales associate micro forecast, and I can move it to November. And then you saw my quick metrics respun. So your quick metrics bar is here again. And if you want to see an impact of a micro forecast on your quick metrics, you can simply move it around. This is a great way to think through different business decisions, or discuss, if you're an accountant, discuss different business decisions with your client and how they may have different impacts at different times of the year or at different times in your forecast. So this holiday flavors marketing campaign, it's called holiday flavors marketing for a reason, right? So you would probably expect it to do better in the holiday months, but let's go ahead and make sure that that's happening. If I move this micro forecast to July, what's happening to my gross profit? Okay, maybe my client prefers visuals. So let's go through this way. Right now, this is my gross profit. If I move this to September, there's my gross profit. Oh, I have this higher mark here in December. It's going up slightly higher for gross profit. Move this to October, what's happening? Oh, yeah, that's actually higher even. What if I move it to November? Oh, okay. So this holiday flavors marketing campaign will have the greatest impact on gross profit if I have it in the months of maybe November to February instead of starting in July. So you can work through different business decisions that way, right? So like, what if I hire this junior sales rep in December instead? What will happen then? Oh, I need to move him to December. Okay, gross profit, nothing really happens there. I wonder if it impacts cash on hand at all, or if it's really kind of just up to me when I want to hire them. Not a lot is happening with cash on hand. Cool. Maybe I can hire them then in July, or maybe I want to hire them after the senior sales rep. I can make that decision if I want to. Anytime you move these micro forecasts bar, the micro forecast will move in your main forecast. So you will see that junior sales rep coming into the sales account much later than they were earlier. And so, oh, sorry. You can see this is their account right here. I have hired them in December now, and they're starting to bring in money in February. So when I move that micro forecast bar in the business roadmap, you can see those changes occur in your main forecasting grid. Okay, so now we've shown how you can experiment with the timing of multiple events in a forecast, but you may want to run through different scenarios. Like, what if revenue decreased by 10%? Then what would be my plan? Or what if business events, what if I want to change my strategy? Like, what if I've created my forecast with a heavy emphasis on new hires, but instead I want to do a mix of training and a remodel of my business? And so I maybe want to compare those two different scenarios. Should I focus on hiring or training and remodeling the business? You can discuss different what if scenarios by accessing this thought bubble icon. So this thought bubble is like, what if this happened? That will give you the scenarios manager when you click on that. And you can see I have a few different scenarios going on already. I have my worst case scenario. I have a few different holiday flavor campaign scenarios. I was really focused on finding out when I should have that quarter floor plan, but let's go ahead and create a scenario so that I can show you that. When you click that create a scenario button, you go to the screen. And it's 2021, we're looking up, hopefully, knock on wood. Let's talk about a best case scenario, right? Okay, it's no longer 2020. I can create this scenario or base this scenario off of my main forecast or even a different scenario if I want to. And I can add a configuration or even jump on top of that scenario. So best case scenario, I'm going to say revenue increases by 10%. And of course, with that, I will expect cost of sales to increase, but maybe only 4%. This is my best case scenario. So maybe I want to hire all of these employees in the best case scenario. Maybe I want to buy the coffee roaster, but hold off on the new truck. I definitely want that marketing campaign. And I also want to take on this partnership as well. So yeah, let's have all of those micro forecasts going in the scenario. I'm going to go ahead and create it. Okay, I am at my main forecasting grid, but I have this lovely box in the top right corner that is telling me this is my best case scenario. And when I click on the baseline for the sales account, I can see baseline adjustment has been increased by 10%. So that is the scenario that I'm looking at. I can also view my business roadmap. Okay, this is my best case scenario. Yep, I have this partnership going. I have my holiday flavors marketing campaign. I can move that around, and this will only affect this best case scenario. I can move this around as well if I want to. And if I decide I actually do want to buy that new truck too, I can add that in as well. And any changes that you make in your main grid for your scenario, those will only affect your scenario and not your main forecast. If I want to get rid of the scenario and not look at it anymore, I just have to click this X option. If I want to bring it back or look at a different scenario, then I can access my scenario manager and just choose the scenario I want to look at. So that allows you to really focus on, okay, so what if this happened? Then what would my plan of business events be? What would I compromise on? Or what could I maybe do if my revenue increased? Like what other plans could I have going on? This allows you to run through those scenarios either for your own business or with your client. Awesome. Okay, before we go on to reporting, I hope you're all still with me. I know this is a lot to take in. And again, I will be sending out a recording of this later on if you want to view this again. But before I jump into reporting and discuss that, I do want to mention that you can save your forecast as your budget if you want to. And that option is right here. It's also in the settings. So this allows you, and this really goes into one of the tenets of our development team while creating this forecast. Your Fathom forecast will update with your actuals. So as your actuals come in month over month, your forecast will update with the new actuals for that month, and it will roll forward. And depending on which value rule you chose, those actuals will impact your forecast forward. This allows your forecast to remain relevant. So all of that data is still coming in throughout the year, and your forecast is still updating throughout the year, and you can still change it and play around with it throughout the year. And that means that if something big happens in your business, or if something big happens in the greater world, your forecast is still relevant and you don't have to completely rerun it from the beginning. This also means that you can keep your budget up to date as well with your forecast. So again, as your actuals update, your forecast will update, and you can resave your forecast as your budget. So if you do need to make a big pivot in your budget or in your forecast, you can absolutely do that with Fathom forecasting. The development team designed it to be a living forecast and not something to be looked at the beginning of the year and something that would become less relevant as the months went on throughout the year. Instead, it remains up to date and it remains alive for you to go back to whenever you need. Okay, so we have tailored our company. We've planned for different business events, such as hiring employees, buying equipment, having a marketing campaign. We've gone through and we've created a few different scenarios. Now you're probably wondering if you can report on all of this information. And Fathom forecasting, as I mentioned, is fully integrated into our reporting. We don't have different modules that are not connected to each other. Instead, they're all within one. Forecasting does not cost extra. It's all included in your subscription, and forecasting is integrated with reporting. So I'm going to go ahead and jump into reports. This is our report center. For those who have not been in here before, it is spelled this way because our company is originally from Brisbane, Australia, and so we do have Australian spelling. We have your Excel reports if you just want to download your financial results to Excel, but we also have templates. You can create your custom, or you can use a predefined template. And then you have your draft reports. And I'm going to go ahead and show you one that I've created. So this is a forecast report that I've created. I'm going to go ahead and scroll through it a little bit quickly And then I'll go back to the top and explain how I added the different things to the report. So you can see my forecast report starts with, we're telling you what the report is about. We're focusing on this holiday versus marketing campaign, specifically targeting the winter months. And we have, this possible hot beverage special that we are offering as well. Okay, these are the assumptions that we made in the forecast. And this is our, my voice is cracking a little because my throat is getting a little dry. But this is our drivers grid. So all of that drivers information, whether it be non-financial information or extra information that you've brought into the forecast, that's included here in our report. You have tax adjustments as well, if those have occurred. And then we have our micro forecast. So we have our drivers grid again, but only the drivers that affect the micro forecast. And then we actually have the micro forecast grid as well. So you have our incomings or outgoings, and then our balance sheet for this micro forecast. And then we have our business roadmap. And this is showing the micro forecast for the marketing campaign, but at different times. So we're having it at different times of the year. And we're showing gross profit, so its impact on that. Next, we have these metrics that we're following. It looks like gross profit, projected expenses versus like expenses of last year. We have that balance sheet detail. So maybe we're really auditing the accounts receivable account, or our client is very interested in making sure they know exactly what's going on in the accounts receivable in the forecast. We have that balance sheet layer detail right here. And finally, we have our financials. We have our actuals up to here, and then our forecast forward. We have our profit and loss, as well as our balance sheet. And finally, the cash flow statement. Okay, so let's go through and discuss how I generated this report. I will have to be a little bit quick on this, but don't worry, we'll get through it. A lot of it's found in the same spot, which is helpful. So this text component that I've added to just explain what's going on in the report, you can add any text component by clicking this double T icon up here. This will bring you to the text options. I simply added this singular text box, but you can also add 2 columns if you want to. That's always an option. Next, we have our assumptions. Now you can add these, and you can include several tables, including the drivers grid, any assumptions, as well as any adjustments that you had to make, any tax assumptions as well, by clicking on this page layout button. Then click that bolded revenue at the top and go to forecasting. And we have our assumptions option. And so this will add multiple tables at once versus just adding one of those tables at a time. And you can have the portrait version or the landscape version. But if you only wanted to add this assumptions grid alone, you can go to tables and financials, click financials up at the top and go to forecasting. And then you have your assumptions table. And you can edit it to only include the value rule assumptions, or maybe only the timing rule, or maybe you just don't want to include tax assumptions. That's always an option. You can also edit the date range so that it's including assumptions for. Then our drivers grid. So this is found in the same spot, tables and financials, forecasting. Then you have your forecast drivers. Again, you can edit it to show the drivers for the main forecast, or maybe the drivers for a scenario. You can have all of the driver categories, or maybe only on the sales drivers or only the interest rate drivers. And then you can, of course, edit the date range for the drivers grid as well. And then our adjustments. So if you've made any adjustments in step 1 of your settings, then you can include them in your report. You can go to tables and financials. Again, you can make those adjustments in step 1 of your settings. So they aren't just for your forecast, they actually affect your actuals. You're making adjustments to your actuals. And so you can find this in the financials option, and then adjustments is at the bottom. Next, the micro forecast. So this is just that text component again, the text box. The drivers grid again, I just edited it to only show the sales drivers. And then our micro forecast grid. So you can find this again in tables and financials, forecasting, and micro forecast right there. You can edit it to change the micro forecast that it's looking at. Maybe I want to focus on the coffee roaster instead. You can show only the first certain amount of periods for your micro forecast. And then you can also, this is handy, you can allow report viewers to export this grid to Excel. So if you have that option checked, then you will see this export to Excel button right here. And so anybody looking at the report can export it to Excel and look at the numbers there if they want to. Next, again, another text component, but then we have our business roadmap. You will access the business roadmap in charts and go to forecasting. And there you see your business roadmap. You can edit it. You can show a different scenario if you want to. You can show your main forecast instead. And you can, of course, choose a different date range. You can highlight the current period or not, and you can choose to show that primary quick metric or not. So if you wanted to show cash on hand instead of gross profit, you would need to go back to your forecast and set cash on hand as the primary quick metric to have that show in the report. So I've just done that different business roadmap. Each one is a different scenario that I've created. And next we have our metrics that we're showing. So the developers simply decided to add certain capabilities on top of the charts that we already had. And so if I add my revenue chart, just this revenue chart right here, and I can expand this, I have the option to edit this chart, and I can change the variable that I'm looking at, so I can have operating profit margin as well if I want to. But then this 3-dot icon, again, very powerful. If you go to advanced settings, show future projection, this is where you can add your forecast, and you can choose your main forecast or a scenario. Our developers are currently working on a fan chart, so that would have the option of showing your actuals up to here, and then you can maybe have scenario 1, scenario 2, scenario 3, but they are currently working on that. It's not yet released. So that is how you would add your forecast onto this chart. And again, you can just change the date range if you want to. Okay. Next, this balance sheet layer detail table, tables and financials. Go to forecasting, and then go to balance sheet layer detail right here. You can edit this to choose the account that you're looking at. So maybe you want to look at cash on hand, and you can also choose the date range as well. And you can allow a report viewers to export this table to Excel as well. And then finally, your financials. So this is your P&L, your balance sheet, as well as your cash flow statement if you want. Again, the developers added certain capabilities onto pre-existing tables in this case. So I'm just going to go ahead and scroll to the bottom so I can get this at Insert New Components button. But you would find this in tables and financials, and you would find it in financial trends. So if you click on this option, I like to start with the rolling 12-month, but you can also get here from any of the other tables as well. When you add this to your report, it will show your actuals, your rolling 12-month of actuals. But if you click edit, this is where other options come into play. So again, you have your P&L and your balance sheet. You can have your cash flow statement if you want instead, or maybe a financial snippet. You only want to look at revenue if you want, or maybe just expenses. You have your date range. You can do a custom range. And so maybe we only want 1 month of actuals, and then let's do 11 months that are into the future. Right now, nothing's happening because I don't have a projection chosen. So if I add a projection, I can choose a forecast or a scenario again. Can I choose my forecast? And so you can see my actuals are highlighted, and then the rest of this is forecast. And so this is the option if you want to show your actuals with your projected forecast. If you only want to show your forecast, you can just choose that option. And then I would choose probably current financial year. If I want to choose next financial year, as well as third financial year, or choose custom. But these are only your forecasts, so none of your actuals are chosen or are shown. And so that is how you would add your forecast financials to a report. Okay, it looks like I have a few questions. I'm going to go ahead and stop sharing my screen so I can view those. Let's see, Q&A. One enhancement for us accountants is that every screen and report uses commas to format the numbers. So I think that's a compliment because you have commas here. If it's a question, then please let me know if you're wondering how to get rid of commas or something like that. But hopefully you're saying that that's great and you like the commas. And then let's see, can you add a micro forecast? The annual revenues that you think an employee will generate. Oh, so you would